So the first thing I'm gonna do is the first thing we wanna do is we want to go through a recap of all the trades that we picked up for the past 1 week. And yeah, so let's jump into the VIP and let's look into it. From the 28th of July, we see we ask people to sell V100s and we also ask people to sell fixed 25s, and all the trades just came out in a really nice place. V75s and if it's 100s, which is pretty nice. And we also had the buy on fixed 25 and the sell. These were actually pretty cool trades that we took, because if we look into these conditions, these are the previous conditions that we traded the last time. And if we look at the next, these are exactly the exact same but opposite, the opposite of the very similar thing on a V10 and on a VIX25, and these were shared the very same time, something like 3 minutes before and after the other. We also had it drop nicely all the way to the downside and zero drawback. We also had some sells on VIX20 on Step Index and on VIX50. If we look at the sells on VIX50, pretty nice, and if we look at the sells on VIX50, pretty nice too. We ended up having these ones moving all the way down and close some of the trades today. And it was a pretty good week because of, in fact, it wasn't a week. This was a Sunday trade that we deposited 90 US and we had a $200 return on a Sunday, on a nice Sunday, right? Like very small growth on a nice Sunday, which is very good. This is the big fruit that I said. I traced early this morning. I also picked up a trade on Crush 1000 right there, not this one. I also picked up a trade on Crush 1, but I didn't share this signal because it was pretty late at night. It was just too late. I traded it right there. I just woke up, I caught it, then I returned back to sleep around midnight hours, and actually traded. And the results are pretty nice. Our trading is actually going fine. The last week we traded 10 entries and we lost only one. And this running trade right there, because when I shared these results, this was still running, and as it was still running, it ran into profits and it ran into much more profits, which was pretty nice. So with that, let's get started with today's video. What's up, guys? So let's jump into the video for today. This is your boy Louis from Nice Peep speaking, and today I'm gonna talk mostly about a structural change or a reverse, the conditions you have to pay attention to before you can judge whether the trade is reversing. Like, I've had questions before, people asking me, okay, so can I hold this for long? Is there any chance that it may come back again, or and all that stuff? So it all depends on the structure. It all depends on what is the structure saying. Is it time to reverse? So there are conditions that you actually have to look at before you can just judge that it's now changing in direction. There are conditions that we have to look at. So normally when we are looking at structure, this is the overall direction of the market. This is the overall direction of the market. So if it's the overall direction of the market, we want to consider the higher. We want to consider the higher time frames, because these have the overall direction of the market. Like, this is where the largest movement is heading to. So H4, in fact, M1 can be buying as much as it wants, right? But if the H4 time frame of the weekly time frame is going down, right, it means the bullishness of M1 will not last any longer than what it is already performing, like than how it is already performing. So let's look into some of the conditions, and this illustration that I put on the screen, right, let us assume that it's a sketch drawing of H4 time frame on bullish and bearish scenarios. So this is H4 for bearish to bullish scenarios, right, and this is H4 from bullish to bearish scenario. Now let's look into the very first conditions that we want to look at. Number one, these conditions are sequential. The first thing you want to see, the first thing you want to consider is price taking out all the stops before or below the previous lows right there. So we have market forming a low right there, forming a structural high right there, a lower high. That's why we're calling it structural. Then drops, taking out all the liquidity below this. So if you were, let's say for example, you were in this trade, right? You took a sale right there. You want to take out your profits right there. Why? Because it actually took out the liquidity below this previous low right there. So it raised all the stops right there. Then traded all the way up. Now, when it traded all the way up like this, you want to consider two things. This high right there in the previous high. This high right there, you see that it's actually higher than the previous high. And what were we expecting in a trade? We're expecting that it becomes low, then it lower, low, lower, low, lower. But because it actually struck through, right? This is a strike through of the previous high. This is what we refer to as a break in market structure. So when it happens like this, this is what we refer to as a break in market structure. This is what we refer to as a break in market structure when it happens like this. So now we have two conditions. We have stops being raid. Let's call this the stop hunt. So we have it right there. We have the stop hunt and we have a break in market structure. So whenever we have the market structure being broken, we wait for a retracement. There is always a retracement when under normal, not really always, but under normal circumstance, when the structure is broken, the market usually retraces to the order block around that area. Right, so these are the three conditions that you want to see in order for you to determine that is the trend actually changed or it's still gonna come back to those zones. So when we say RTO, we are talking about a return to origin, a return to order block, or return to origin or return to order block. It depends on how you learned it the first time, but it all speaks the same thing. There is an order block around this area, so when the market comes back to that zone, right, price begins to rally all the way up and you start considering all your buy orders. And let's say you bought it somewhere right here, you have this setup is guaranteed that the likelihood of price coming back to this zone right here is very low. You get the sense, guys? Great. So these are the very same conditions, but from bullishness to bearishness. So let's look into it again. We see, first thing, price forming a high and forming a structural low, forming a high. So liquidity that lies on top of this high right there has been taken out by this high right there, which is what we call the stop raid, right? Great, stop hunt, depends. Right, so the stop hunt, perfect. Then we have this low right here. So the moment we have market forming a low right there, we are beginning to consider two things. This low is the first thing, and this other low is the second thing. So we see that this low is not a higher low as we were expecting if the trend was to continue. If this trend was to continue, we're expecting to have a low right there, which is a higher low and a higher high, a higher low and a higher. But in this case, we didn't have a higher low. Instead, we had a lower low. So when it happens like this, this is what we call there was a strike in the market structure. There was a strike in the market structure. So we have it right there, a break in market structure right there. We have the market structure being violated to the downside. When that happens, whenever we have a break in market structure, it is normal, or it is phenomenal, just like we have a breakout and retest, like all those principles I don't normally teach. But whenever we have a break in market structure, we wait for a retracement back to what? Back to a certain origin, back to a certain zone of order block. Well, if you don't know what an order block is all about, I'm gonna put a link in the description, or you can just click the eye on top of the video so that you can go back and watch that video. If you don't know what an order block is, then we have it right there, RTO setup. So this is a zone where you want to consider looking for yourselves. And if you happen to pick up your trade anywhere from around this zone, the likelihood of this trade going back to all this zone right here is really slim. Why? Because of these conditions that you have right there. Now with that, let's jump into the chart and let's look into these conditions nicely. Great, guys. So we're jumping into the chart, and in front of us we have a beautiful price piece of volatility 75. One is on an H4 interval. Now look into how price changed from this upward movement to this downward movement. Exactly the principles that I was teaching in on the open board right there. So let's look into it. We have structure, higher lows and higher highs. That's an uptrend. Great structure. And we have it right there. Price forming this high, nicely done. And price forming this low. Beautifully done right there. Now let's look into the conditions on how price actually did it. How price actually did it. We have a high right there. Price takes out the liquidity that lies above this high, and price drops. So instead of forming a lower, or I mean a higher low right there and higher high all the way up, it actually formed a lower high, right, taking out or striking through this previous low right there. So this is what we call a breaking market structure. So when that happens, we anticipate that price retraces back to a certain zone of order block, like what it has done right there. Let me just change this, giving it the color of order block as usual, which is yellow. And because it has retested this specific zone of order block, price begins to rally to the downside. So if you could not catch this, you could still catch this sell, you could still catch this sell right there, and you could still catch this sell right there. Why? Because the likelihood of price returning up all the way is slim now, because it has formed the conditions of a change in trend. Let me try to look for another chart that is a little bit bullish so that we can look into an example of price changing from downside. We have looked from downside to upside. Now we'll want to look from upside to the downside. Great. So looking at another opposite example of exactly the same scenario, we have volatility 25 index on an H4 time frame, and we have it right there forming this downward structure, and we have it changing from this downward to an upward structure, where we're actually looking to buy these setups that were formed within this upward cycle. Now let's look at how it's actually changed. We have low right there, all the stops being taken out. Let me change the colors, give them the usual colors, right? And we have the lows being taken out, and we have the highs right there. So instead of forming the usual high, it broke out of that specific high, right? It actually broke out of that specific high and came back to retest a specific zone of order block before it started to rally to the upside. So color yellow, the color of order block, and right there, boom, we have it. So after forming these conditions, price began to rally to the upside. You could have bought right there as soon as this happened. You could have bought this bounce on 50 EMA, you could have bought this bounce on 50 EMA, you still could have bought this out. If you don't know how to buy this bounce on 50 EMA, I encourage that you watch the previous videos. I think the previous two videos, they explained that the most. And if you don't have the template, I advise that you also watch the previous video on a Mac on Windows, so that you can see how to get the template for 100% free from our channel. Now, if you haven't subscribed to the channel, guys, make sure you subscribe and turn the notifications on, because I release nice content each and every week whenever I have opportunity to. With that, I wish you a good luck and good trading.